Welcome back. Now, Egypt recently negotiated a staff-level agreement with the IMF for a $12 billion loan to be disbursed $4 billion per year for 3 years. Now, Egypt has been experiencing some economic turmoil, and the government is planning a reform that is expected to set the country on the right path. Analysts at Exotics Partners London have been following this trend in Egypt. I'm being joined by the head of Frontier Market Strategy, Middle East and South Asia Research, Hasnan Malik. Good afternoon, Hasnan.
Good afternoon.
Now, could you give us a general assessment of the present state of Egyptian economy?
Sure. If you look at the Egyptian economy and you measure it by a crude number like GDP growth, it looks okay. It's around 3 to 4%. But if you delve a little deeper, some of the underlying currents are truly concerning. Inflation is now back above 10%. Unemployment is about 12%. And within that, youth unemployment could be triple that figure. And remember, that was a big cause of one of the underlying drivers of the protests 5 years ago. If you look at business confidence, that's been contracting for the last year. If you look at FX reserves, which obviously cuts to the key issue of the currency, those are roughly half what they were prior to the fall of Mubarak in 2011. If you look at some of the underlying drivers of that, FDI, foreign direct investment, is about half the level it was before the 2011 revolution. Tourism is only 1/3 of what it was back then in 2010. And if you look at gas exports, those have virtually disappeared. Egypt's now turned into a net importer. So all of that paints a pretty difficult picture on the ground. And when you consider that all of this has happened in an era of relatively low commodity prices, where Egypt's a net importer of quite a lot of commodities, and during an era where Egypt's enjoyed really massive support from its geopolitical allies in the Gulf, first from Qatar in the initial year or two after the fall of Mubarak, and obviously more recently from a combination of Saudi Arabia, Kuwait, and Abu Dhabi. So the best part of $22, $23 billion worth of assistance and aid and short-term deposits and cash transfers and subsidized petroleum products has helped Egypt be propped up over this last 5 years. If there's any risk to that going forward, on top of these quite difficult conditions on the ground, things could potentially look very bleak.
Now, looking at the recently agreed $12 billion loan with IMF, that's going to be disbursed for 3 years, you came up with a report which you titled "On Your Marks, Get Set." Tell us about this report. Why is this deal important for Egypt?
Sure. So this report is really written for the benefit of foreign investors, particularly in the equity market. And the main message of the report is that the IMF deal, if approved by the IMF board and the conditions attached to the deal are accepted by the Egyptian government, could signal a really important pivot point in the equity investment story for foreign investors in Egypt. And the reason why I say that is the fact that this deal is happening in the first place is probably already a signal of two very powerful things. One, that the really key voice in Egyptian policymaking, which is the Egyptian military, could well have undergone a change in its attitudes towards interacting with the IMF on the one hand and engaging in the sort of reforms required to obtain that IMF assistance. And when we talk about those reforms, we mean broadly things like much more flexibility in the currency regime, which is really key for foreign investors who generally have their returns denominated in US dollars.
Now, of course, the Egyptian president has actually promised, or probably says he's ready to implement some of those reforms. Again, one of the conditions IMF has given for this deal to be approved by the board is if the government secures $5 to $6 billion in bilateral financing for the first year. Do you see them achieving this?
Well, it's something of a circular discussion, because with the IMF program in principle in place, it provides a lot of comfort for some of those potential bilateral donors, because it provides some anchors around the policies that Egypt could adopt going forward. And that provides some security, if you like, around policy execution for those countries or those sovereigns or those multilateral agencies which may provide that additional $5 to $6 billion. There's no shortage of funding available for Egypt. It's more about whether those providers of capital, those donors, can be comfortable that their investment, their assistance is going to be safeguarded. And providing, for example, $5 to $6 billion when you think there could be a very sizable devaluation imminently becomes pretty problematic. If a devaluation is part of that IMF discussion and that IMF deal, on the occasion of that devaluation, after that's happened, it becomes a lot easier for those external donors to provide that level of funding.
All right, thank you very much, Hasni. That's much we can take of that right now. Well, that was Hasni Malik, the head of Frontier Market Strategy, Middle East and South Asia research, talking to us there from Dubai. We move on now. The National Insurance Commission has suspended all bank assurance distribution channel in the financial sector. The decision was announced at a meeting in Lagos by the Insurance Commissioner, Mr. Mohammed Kari. He explains that the decision is taken with a view to ensuring the right regulatory oversight in the industry.
The Commission has been in discussion with the Central Bank on the bank assurance distribution channel for some time now. However, last week we received a letter from the CBN asserting that NICON is not in a position to license bank to do anything. They asserted that NICON is not in a position to license banks to do anything. And we feel referral or any agency of insurance is not anything. As such, we cannot go ahead with the arrangement for now, though we will continue to engage the CBN until all the gray areas are resolved and they see to the need to allow the banks to enjoy the referral option and earn commission from selling products to their clientele.
That was Mr. Mohammed Kari, the Insurance Commissioner. Now let's take a quick look at the Interbank forex market and see how the Naira is behaving today. Denma Iyagba, forex dealer with UBA Group, joins me now. Good afternoon, Denma. Hello, Denma. Good afternoon.
Yeah, hello, good afternoon.
Now, the Naira closed at 313 Naira to the dollar yesterday on the Interbank spot market. What closing figure are we expected to see later today?
We'll probably close at 309, 309.50. That's what we're expecting today.
In other words, we're seeing some appreciation there. Was there any CBN intervention in the markets today?
Yes. CBN continues to show its hand every day, intervening in the market.
Now, what is happening in the futures market now? Any development?
So far, there's over 2 billion forward sold in the NDF market. So it seems to be a very active market so far.
Now, from what you have observed so far, what is your outlook when it comes to the foreign exchange market?
Well, so far we're still in the teaching stage, but I expect before end of the year we should see a rapid improvement in the exchange market.
All right, thank you very much for your time, Denma. That was Denma Iyagba, forex dealer with UBA Group. We'll take a quick break again, and when we return, we'll look at the activities of the fixed income market. Just stay with us.